Morning everybody and welcome to today's morning market. So today I'm going to focus in on this morning's UK inflation data. So that came in above expectations at 4%. But really what I want to do is give you our take on this. So as per the introduction, UK inflation data, so headline inflation year on year for December came in at 4%. So that was ahead of expectations at 3.8%. And it was also ahead of what we saw in November at 3.9% overall. If we look at core inflation, so that takes out the more volatile components of both food and energy, on an annual basis, that is the same as what we saw in November, so 5.1%. And just to give you the monthly uplifts in both headline and core inflation. So headline on the month rose by 0.4%, and core inflation on the month rose by 0.6%. But look, they're the numbers. Really, what's the most important thing is to try and understand what's actually behind those numbers. So why are we seeing inflation increasing? So if we look at the underlying components, the biggest upwards contribution came from higher tobacco duty. Prices rose within the category of alcohol and tobacco. So if we look year on year, prices rose by 12.1%. If we compare that to where we were for November, that figure was 10.2%. If we look, there are other upwards contributions, so other prices that have inflated over the period. Recreation and culture and clothing and footwear were probably the two most notable. What I would say though is it's not all negative news. Within other categories, we've actually seen inflation slowing. So for example, food, non-alcoholic beverages, and also restaurants and hotels. But what's our take on this? What's the government's reaction as well? I think Jeremy Hunt, Chancellor of the Exchequer, he came out this morning and in his words said that the rate of price rises does not fall in a straight line, very much a valid comment, and that the government's plan is working and they should stick with it. He then said that they need to stay the course, boosting growth and providing competitive tax levels. For us, what do we see? Well, today's inflation reading still came in below the Bank of England's forecasts, so the Bank of England inflation forecasts. What we expect is a revision downwards for its inflation projections in February's monetary policy report. If we look, our expectations for interest rates in the UK is that we will see interest rate cuts come through this year. There's differing views around when we see those first interest rate cut come through, but very likely to come through before summer. How have asset markets reacted? So just maybe starting with the UK. So you've seen some sterling strength come through. So this morning, sterling up against the dollar by around about 0.2%. As you'd expect, you've also seen a rise in UK gilt bond yields. So the 10-year now is around about 3.9%, up around 10 basis points on the day. Unfortunately, a little bit of a negative start in equity markets globally, not focused around UK inflation, but more focused around some of the rhetoric that we've seen from various central bankers over the last day. And probably the main one to pick out is the Federal Reserve Governor, Christopher Waller, who said yesterday that the Federal Reserve needs to be a little bit cautious when it comes to cutting interest rates. As always, we're monitoring everything that is happening in the world in respect of the macroeconomic environment and asset prices along with the managers that we work with. And what we'll do is we'll come to you with more information as we have it. Thanks a lot. Speak to you soon.